Corey McLaughlin here from Stansberry Research at our 2024 conference in Las Vegas, here with Pete Carmasino, Chief Market Strategist of our corporate affiliate, Chakin Analytics. Thanks for being here.
Great to be here. Thanks for having me. I really appreciate it.
You spoke earlier this week about the national distraction we've got right now as investors. What is that?
So it's it's an election year, right? Now, Mark and I have discussed this many times, and election years just get more distracting, and sometimes they can be entertaining, which I think this one is. And people kind of lose track, and they start to worry about some sectors, or try to position or make a bet on a sector that they think is going to do well based off of which party might win or which candidate might win representing that party. And you just, there's really just no consistent theme. There's really not a lot of evidence that shows a consistent return doing that. It's actually more risky than not. Really,
it's more risky to bet on election results or expectations, I guess, or both.
Based on the party trends. Yeah. In other words, we talked about it in the presentation a little bit, where under Obama, the top two sectors were technology and consumer discretionary. Yeah. Then Trump came in, and we know he was pro-energy, drill, baby, drill, the whole mantra of that. And energy turned out to be the worst performing sector relative to the S&P in his campaign or administration. And then the Biden administration comes along, and everyone thought, well, there's no way energy is going to do well. And actually, it turned out to be the best performing one under the Biden administration, even though he was anti-fossil fuel.
Yeah, so. It doesn't really make much sense, right?
Right.
But I guess the market doesn't make a lot of sense a lot of times.
I think it's more or less people just want to find something to worry about. They feel like taking action is something that you should do. But really, for us, we've boiled it down to, or at least I have, to the way I look at it, is that the party trends don't matter. It's the price trends that I follow.
Yeah, and you obviously use technical analysis, but I know there's fundamental analysis involved too with the PowerGauge.
Yeah, PowerGauge is so unique, right? It's a 20-factor model Mark Chakin built, several years ago, and we use it in a lot of different formats. One, it obviously rates the stock, but we also rate ETFs, and that helps us uncover trend changes in the sectors of the S&P as well, because we rate all of those equity sectors, the sector ETFs as well. So we can see when new sectors are sort of climbing the ladder, up to the top or the higher ranking ones. And that kind of elevates our game, because now we're doing top-down analysis based off of the underlying stocks inside the ETFs that are performing, no matter what the indexes are doing or anything else. We can see it. I think I said it in the presentation. It's before, during, and after elections all the time. So we can see some sectors that are standing out right now.
Okay, that's what I was going to ask you about. I mean, one, I guess we expect volatility in some form or fashion around the actual election time period.
We're getting it right now, right? Absolutely.
Right. So we are. So what are you seeing already, like leading into it?
So I think the top four sectors, technology is always somewhere up there toward the top, right? We can't get away from it. All the indexes are kind of heavily weighted into that sector. So we understand tech is going to be most likely in the top 4 or 5 sectors anyway. But the top ones right now are financials, XLF, if you look at that particular ETF, XLI, the industrial sector, and then utilities, which are all cyclical in nature. And obviously, we talked about the build out of utilities and data center and all of that, new infrastructure that needs to be built to support, here we go, I'll say it, AI, right? And here comes AI down the road again, and saying it uses so much electricity that they have to build out. And so we saw this early in the year when the construction and engineering sector, or industry, should I say, those particular stocks were starting to break out early in 2024.
Gotcha. Yeah, and inevitably we got to AI here, because that's been a theme from a lot of, I come away from this conference thinking that I've been underestimating how early we still are in AI.
I agree.
Yeah,
I agree. And think about what's happening. Microsoft's talking about buying 3 Mile Island, and doing all these things, and with Constellation Energy, and you're seeing a big move there. And then Google and Amazon come out and say they're going to be building out all of these nuclear reactors. And so there's small cap names that people are kind of gravitating toward. But I do think let's think about it. Just have you ever built a house? I mean, it takes a while, right? You get your permits, you got everything in order.
Yeah.
The supply chains have to be right. So it's not going to happen like next week, right? So investors are looking ahead. Market looks anywhere from 12 to 18 months ahead sometimes. And I think the sector bets that they're placing today could be sort of market neutral in a way. I think about utilities is in the top 3 sectors,
right,
and it has one of the least weights in the S&P index itself. So it's not going to move the index, right? Technologies are the 4th one in that game. That's going to move the index. But the utility sector, there's alpha in there. It's not just that defensive posture anymore. It could actually be an alpha generating sector, even though you're not going to get much exposure if you buy the index. So the utilities in general may offer better opportunity.
All right. Well, hopefully everybody can get a sense of how you guys operate already just from that, and how you're able to find different opportunities and sectors and specific names within there.
Absolutely.
So that does it for us. That's Pete Carmasino on day 3 of the Stansberry Research Conference in Las Vegas.